Hello and welcome, traders. What you're looking at on the left side is the software tool which we delivered to the planet 4 years back, and it was quite an achievement that we never had to change anything on this. There's no reason to. And this is the fourth anniversary, and you can see it looks the same and it works the same as it was working last year, 2 years back, 3 years back. And first of all, you should always keep your eye focused on these green levels. From this structure, we are producing these green levels, right? So you can see it respects these levels. But how do you gonna trade those levels? Like from here to here is 20 points. From here to here, you can see it's 50 points, right? From here to here, and it's again 40 points, 50 points. Now you can do the math. 1 point is $50. 50 points is $2,500. 10 contracts is $25,000 within 24-hour radius. But you need to get some little perfection and not get hesitant about doing something when you stick to the plan. But anyways, so as always, we never want to trade blindly any levels. This is giving you the context because one of these days this happens, right? Which will happen. We already know this is part of the plan that it will hit those levels and then it will once in 20 days it will break out of these bands. So now how do we trade this? See, they are all captured within market cannot, by law of nature, just get out of the bands that easily. Second thing we have to understand is the market is opening here close to the green bands. We want to do something different. It's already been discussed earlier, so we're gonna just discuss that earlier. Right now market open here and it was on the top of the band. You would have shorted, you would have lost the money, right? And you will say, hey, I was just taking the top green band and we should be short. Why is not going short? And there's a structure which has to go through, it has to complete. So this is why we have helper charts. On the right side, we have 3-day TPO chart. In latest multi-chart upgrade, you can just put like TPO 3-day, 5-day, whatever instrument you're trading, you can have those TPO charts. Then you can do a lot of things like you can right click, you can merge profile left or right, you can expand the profiles, you can say expand the profile, and now you can see how the profile is being made, right? How those bell curves are being constructed. So okay, so that is how you can set up two chart scenarios. On the left side we also have momentum oscillator, and then we have RSI oscillator. One is on lower time frame, one is on a higher frequency, you can say, and one is on the lower frequency. So let's pick some random days and first of all give you the principles how it works. So first of all, you should understand market profile a little bit. I think you should have read all the books by now. It's been 3-4 years and mastered all those, but I'll just review a few things quickly. Now you see, we talked about in the one of the videos the C structure. C is basically, this is what is creating this big huge bar. Big huge bar is going to be all, if this is opening here and closing here after 3 days and you have a 3-day bar, is going to be a big red candle. Within the red candle, you can see if I expand the profile, market is rotating like this. See that it came down just and it is rotating. So you can see there's a thick rotation on the top and thick rotation at the bottom, and there's no much rotation on price in the middle. That is why you see the C structure, because there was no interest in these levels for these 3 days for market to do anything. So you know, so we also discussed that you should mark those levels where the C started and where the C ended. So this is a place where the C started and this is where the C ended, right? Somewhere here. because market loves to fill those C's and tries to make it into a rectangle. So if I put this on top of this, you can see it will become mostly like a rectangle shape, right? Visually, if you stick it here, it will become like almost like a perfect bell curve. So that's what market is trying to do. How can we use this? When this structure happens, these are the levels where market will go and test, right? So market was here and it closed here, and then it is a gap here, open here. Where did it go? Initiative on the top side, and then it was rejected because it doesn't like this price. It did not like it last week. It's not going to like it first time when you visit it right here. So the first time expectation, as I was saying, sorry, I had to drink some water, is rejection. All right. So now let's expand these two profiles and see how it worked out. Okay. All right. Market was rejected. Is for not rejected because it closed here. It was not done. That's why you have to expand it also. It was not the initial rejection. It was way in the end. It was end of this profile itself, and you opened up, and then instead of testing the bottom, because it closed at the bottom very strongly. If it did it first time here in the beginning of this 3-day profile, this was a short. They closed it very strongly. They never had time. They thought a weekend, and then they opened and they tested this big time here. Okay. So now, keeping that in mind, that this has to fill, it will rotate a few times. Especially after a big move like this, you see this market makes a huge move and then it goes sideways. That is what is going on underneath the covers. Then you try to measure by circle, height of the circle radius, and then how much time it took to go down. It has to steam off the sideways and all these things. It is all trying to fill the C gaps. Okay, so how will we trade this C gap? I'll do the same thing with this guy. Open and expand the profile. So we know we want to go short in this areas. 619 market was going up into this level. I want to short, and this is 619 from today. This is where we know now we have a bigger context. What we are going to do, we will look for a short. Now you see we are at the top of the green profile and we have this momentum going up. The cyan line is above the dotted line. We want to take longs only. Below, shorts only. Now again, people say, why don't you just do a buy sell on this? It doesn't work that way. Not professionally. So we have to be very careful. Okay. So I'll tell you how to use momentum and any oscillator you have of interest properly, and the retest of momentum and the price. This is what we are discussing right now. So anyway, so I had this context already built. I want to take shorts here. I want to go longs here. So here, first time market opened, we don't know what happened, right? So it went up, came down. Now this is like a support and resistance. It broke the resistance, came back to support it. It was supported many times. So how are we going to trade it? So now this is where if market is in this situation when the higher time frame is here, and look at the momentum. Let's look at the momentum here. It is tipping over. Now momentum is moving up, as you can see from this. What I need is, now this is where the oscillator will comes into picture. Got it? So here in the real time you will see this is gonna show up like here, because this is different time frames. This is 45 minutes on the left side, doesn't matter. So I want to go long at the green. Again, also always said that let the trend confirm and wait for the pullback. People never do pullbacks. They want to pick this extreme high and low. See, I got the stop tick. I got this top tick. Who cares? Did you make money? You can still make money. This is break, pullback, perfect entry. Momentum is higher. Moving up, and look at the oscillator pullback. This is where the oscillators are supposed to be effective. Once you pick up the direction, now this is the context we want to play in this level. 3066, it is right here. Right, so we want to go long here. So we want to go long here. That is context number one. So okay, I have a context number one. So I will maybe put it down here like this from this chart. Okay, I'm at the green level. I am. Now we have two RSIs going up. Okay, so if you want to be a conservative trader, there are two ways of getting into the trade. And I think every time somebody asks me to, I'm not getting success, I tell them 20 days, follow the plan and see how it goes. You should not chase the price. Let it prove it to yourself. Let it prove itself. Right here. It can continue to go. It can continue to grow because there are levels below that. See that? Luckily, market opened on the high side and it came here and boom. If it have opened here, it would have gone down. So you cannot. So you have to put things in context. How will I trade this? If you're going, let it go. Let it go. I am expecting a turn. I'm expecting the level. My level is there. What I should be doing is I should be putting a buy stop. Buy stop in one of these lines. It will pull you in. If market is really, sincerely, you're not change the momentum and this will be supported. Let it prove itself. You enter here or here. Add the white line. If you do that, stop loss initially, you make it bigger, then you'll pull it up. But what you are going after is, you're not going after 5 points, 2 points, 3 points. You're going after 50 points. If you're going after 50 points, you have to have 3-to-1 ratio at least. So 15-point loss should get you 45 points in. And it will take some time to work it out. It's not going to happen in seconds. So when market proves itself, what you can do is you can hide behind these levels. Let it go up. You can design, okay, how you want to trade. Okay, I want to, when it jumps twice, 2 jumps, then I'll always be behind these lines. Every line is respected, but you can't take, this is not buy here, sell here. This is not a system, scalping system. We want within the 24 hours, we want to make 4 to 5 trades a week and try to capture the entire swings. You can also, this is one of the best things you can do is also trend lines, right? So this will be one trend line. This will be other trend line. Basics. This will be like here, right? And from this trend line, people who have the system, this will be pointed out. Let's try it out. So while this is all happening, you have to have confidence. This is homework you do overnight. When you're ready to enter the trade, you're not in the trade. Now this sharpest trend line, you have to measure this and it'll give you the height. It is also, where the break happened from here to the end of the line, you should see 2 lines coming up on top, roughly. And there we go. So it is telling you market is going to reach this point on the top. And you know that in advance. This is where market makers are going to come and hit it. So they will, because they are not looking at scalping. There are auto algos doing that too, but bigger money is made in these big swings, not buy here, sell here, buy here, sell here, Anyway, so momentum has turned. If you wanted to say, hey, I want to turn the momentum first. Okay, that's fine. So you have to wait for the retest. You have to wait for the retest. And luckily at this retest, we have a green bar and we have oscillator and you can see momentum is shifting up. It is shifting up, right? What do? Draw the line. Same thing, This is a trend line. You have to draw multiple trend lines. But this is a trend line. We can also draw a trend line here. There are 2 points here and here. 2 trend lines at the bottom. Who is stopping us? Nothing. Simple technical analysis cannot be abandoned because he found something else is going on. Safest way to trade. So you want to wait for the buy stop to pull you in. This is 40 points, pull you in, and you take a loss 20 points. So 2 to 1 ratio, right? But we know based on our experience, based on how the market structure is following, and we will also know if I do the same thing I did it here on this, I can pinpoint this point based on two techniques, 3 trend lines and extensions. So this is how I'm qualifying things and making up my mind. So we shot it here, shot it here. We went long here, we went long QQ here, we shot it here. So we don't want to be the ultimate guy to pick the top tick and bottom tick. Doesn't need to be that way. But we want to do reversals because when market is going up, puts are cheap. When market is going down, calls are cheap. Or you can do futures trading, right? Anyway, so that is, and we have to draw 3 steep lines. One steep, one mid, and one is medium. So this third line, the way we know the trend lines are solid, and the best way to trade the trend line is the back test. When the trend line is broken, it comes to the back side of the same trend line at our level. Now you see the oscillator, momentum, everything is coming together. That is a simple process you have to follow. How much time it took? Like 5 minutes. Suppose I'm talking too much. If I have to just do it, I will just do boom, boom, boom. Within 1 minute, I can do all this very fast. Practice. But anyways, so I wanted to show you that. So and at the same time, when we know that we're expecting this will be rejected for the first time, what level is this? 31, 3160. Is that the price? Yeah, roughly 3159 or 60. 49, sorry. What's going on with this one? But okay. So anyway, so I'm expecting price will go here first time. It was rejected. It will reject it first time. It got there. It will reject it. Now, if this one would have done it here first time, I would have taken the shot here too. Anyway, so these levels are known. So this one also you put a bigger blocks. We are not. This is not designed for your tick mastery. This is not designed for that on the day one. Momentum shifted. The RSI slow one is already going down, so we are expecting. And we are at the green level or a little higher, so we want to go short, and we have already seen market has taken a structure. So what has happened here? Market structure has been complete at the green level or higher. This is the area we want to go. We can qualify within this range where that is going to go as well on the higher rotation. You can see that this is a C point of rejection. This is how the trades were taken, long side, short side. So let's pick any other day. Let's do this one. So let me collapse that. How hard was this? Nothing. This is a matter of practice, nothing else. Okay, so here again, this is a extensive profile. It's a 3-day profile I just built. You can have 5-day, 7-day, 6-day, whatever your philosophy tells you. I think 3 days is good enough because I don't see that trends last more than 3 days. They rotate the market, so that's why I put 3 days. Okay, so now here in this area, so where is the C's here? This is one C, and this is another C, right at this level, and this is another C at this level. And what else is going on? So let's assume that we were sitting on this day. We can take any day you like. This is fine. Where am I? Sorry. Let's take some aggressive moves. Simple moves also we can do. Let's do this market rotating sideways. The sideways, this is like 60 point rotations. So before I go any further on the profile, I want to show you one more thing is the divergence, right? Again, this is all simple market profile principle. Where are the critical levels of market profile yesterday's? This is where the traders are. They are concerned about yesterday's high, low value areas, as we know already. Everybody knows that. So it is at this high level of this market profile. Look at the divergence between the momentum, right? You have to pick your mind's vibration, how you want to do it. So see, this one is high, this one is high. So it could happen this way, or it could always give you retest, pull back into it. So I want something to break, then get me in. It may take a while, but I'm trying to swing for bigger opportunities and hold it overnight, 2 days, 1 day, whatever I need to do. So what has happened here? Market came down, built this whole profile this day. Next day it started and tested this value area, point of control. This value area's point of control right here. Came back to this level, and I'm looking at this. Okay, hey, this momentum is not following. It should have been here. Momentum should have been here if the momentum was real, like almost like this, right? And it is like this. What you see. This is not really powerful. They're just retesting the POC to see if the sellers are still there. There's just a mind game going on. The seller put it down. They wanted to come back to his test and say, hey, are you really still there? And he showed them that he is. That's why they went up with low momentum. What we also need one of the oscillators, slow or fast on the upside, right there. Perfect entry. Now green line is on the top. It's nowhere near. It tested the value high, or POC I mean to say, from last night, right? This is how you structure your trades. Now also we can see why it stopped here. You can do a trend line, and I can do the same thing here. Bigger swings, bigger swings. So okay, this one looks like a good trend line. Then I'm going to use my Fibonacci extensions from here, this guy, and say, okay, where am I expecting market to go? It's saying it should go in this area, right? So what is there in this area? I have two lines here. Green line is way here. So I will not take the green line here. Market opened here. It'll go down or it'll go up from there. It was sitting on the green line when it opened. And the structure from this is not completed until this point. So we already have that first step in mind. Always do this first. Where are my structures ending? And once we know that, where are my lines? Is there momentum divergence? No. Higher high, both sides. So only thing I have is my purple line, end of structure, and my oscillator. And you can take a risk. Stop loss here, here. Double of that should be somewhere here. How many points were there? 65 points. With 10 contracts, you can do your math. But you will start with one contract for 3 months, and then I made a precise plan for people to follow. Unless you double your money with one contract, you will stay with one contract. That means you're not able to really see the structures properly. So these lines are there to help you as a stop loss, profit targets, and overall structure where the market is. It's very hard to see like this here. It's very difficult to do this. You need huge practice here. That's why we build this. But anyway, let's see what else was going on here. Was there a structure here which could have been like a C rejection or not? We are not. So here, let me expand this. I think we should expand this. Okay. So what's the price level here? So market was coming down from here. This is like also a C, mini C, but this is still C, right? So we want to be at the C because once it breaks into the big level, it will not stop here. It will go and test this one. So I will need to always put this in. Okay, this is my rough level I want to trade. If that breaks, I will be taking trade in this area. Next one. That's what market is doing, just testing and filling those C's. That's all. Okay, so market, we already had this area filled up, top and bottom. This was the bottom of the C. So here in this day, these days, it broke down and then it just retested the C and then it closed here. Very strong. You can see the same thing happened what I just showed you earlier. It closed very strongly at the bottom of the C. It will not stop here. It will go and test the top of the C. It did that. But we are just using it. We are not trading it this way, but that is a little advanced trading. So I want to show you the levels are there. So this is also good C, right? Stronger the C is better. So this is also a C. It was tested here. See that? So market is just doing this rejection point test. Same thing. This is also a C. Market was doing something, came back to rejection point, got rejected, went up, and that's what it is doing over and over. Same thing here. This was profile was built. It opened here, came down to test the C level and went up. So you mark these C points, right? So let's mark this C point. So we'll just do one more example. So we're done with this free education. So there we go. So I'm building a level of confidence because you will be having hard time trading big, and you all want to make millions, and it's very difficult, as you already know. So 2090 or whatever it is, 8090, 8090. Just put a block here because I think the representation of the block, there's a missing one block. But anyway, don't have to buy CQG and other market profile software. It's all free now. That's worth $1,400. So you can invest into this technology which I'm showing you if you like to. So anyway, so I had this idea, okay, hey, based on my extension, it will try to reach there. And it does. But then you will say, why it did not go to green? Because structure is not complete. That's why I gave those extensions 4 years back. It will be here, here, or here. And one of the days, every 15 days, or every 12, 13, 15 days, it'll break this too. When it's going to be having 100-point moves, right? So once a while it happens, once, twice a month, no big deal. Okay. So this is, I think we already saw these levels. So where was I? One second, let me see, where did I pick? You can pick any level, doesn't matter. These big ones are good. Okay. Yeah, so we are here at this level. So you can see, so I'll put this level also here and say, okay, this is where the higher time frame is also telling me it will push to. So I'll just put that level also and say, okay, this is my C on the higher time frames, and this is where my structure is completing, and this is where structure is completing. I have my, there's no divergence in oscillator, that's fine. So I have my oscillator on the overbought side, and I have my C structure completing, like level, I mean to say. So we have multiple things going on. That's all you can do. Start here, stop loss here. Right? So reversal at its best. How about this guy? Let's do one last one and we should be done. It's the same thing we have been talking about every year, nothing to change. This has been going on for 50 years. There's nothing, we just did it a little better than everybody else. So here, this is a C and this is the level. So it is 2790 area. That's fine. So I'll put something here, 2790 area. Okay, so let's see how that looks like. 2790 area is right here. So I'll just, this is not a trading spot. This is just like a marker spot that, hey, this is area of interest coming from this C. Okay, so that was there. Now we have to see, did our market structure from the trend started from here, huge trend, the sharpest trend line is what we need. This could be mid. We will do multiple trend lines. So this is this bottom, this bottom. Okay, all right. So anything else we have here? We have one more which is going to be very sharp, which is going to start from here and this guy, and there we go. Okay, so I'm going to use this midline. This is too small, this is too big. I'll try to do this and see if anything is fitting and hitting here. There'll be second confluence. And market is here, right? Market is here. We don't know. When we talk about this green line, this is why you have to be patient, very, very patient. So let me draw that. Okay, so I took this break of the line. I should be a little bit higher. This is it. Yeah, midline. It broke here and the top. Gave me the box. So we have two boxes here, right? Okay, so market is, when it's coming down, I already have this hours and hours, a day in advance. I also have this day in advance, and then I'm waiting, nothing else. And then what do I see here? Is there anything changing in the momentum? Market came down, market came down, came down. Now this green level has value, or any level which is there, green or higher, has huge value, huge value. Right? Is there divergence in this? No, lower, 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 low. Okay, don't care about it. That's fine. So I have one confluence, two confluence of price. I have oscillator coming up here and here. So I can have taken long here or here. Take long here, I will stop loss here. So if you held it, and there we go. Went to this level, to this level. This is how market is swinging. Divergence will not happen all the time. How about this divergence? This is very clear. Higher high, higher low. Right? Higher, higher low, and one of the oscillators on the overbought side. And we on the green side. So what happened here? Let's finish this talk. Structure of the trend line, secret level, C level. Momentum is basing, as you can see. This was not giving divergence. That's all I'm using it for. And then entry. Entry could be have been here or it could have been here. It was here was 20, like was 60 points away, so we don't want to go that far off. Let it come down into the levels. And then it could have been green or any of these levels. Enter these level. One or two behind them, you can put a stop loss. With one contract, if you do that, if you're losing 500, you're making 2,000. $10,000 a week, you can do it. You have to trade long hours if you want to make big money. 9 to 5, 1 hour trading in the morning, and this and that. That rule was also given. I think the rule is also there for people who want to just trade opening blast. You know, there's high risk. But even with that high risk, we can still get 8 wins with 2 losses. Structure every, I would say, 20 days. So, like, you'll have 1 loss every 10 days. That's what I'm saying. So 2-3 losses a month, it's expected, which is fine. So you got the idea. So I wanted to explain to you this TPO, how we can use it effectively to measure the big levels on 3-day. And you may want to, on your instrument you're trading, maybe do 5 days, 6 days. This is again a perfect C. This is what we are looking for. This is nice C. This is also sharp C, rejection point. Rejection points. If it was rejected here, what about next week? Why will it, it will try to fill it up eventually. If it is above this, let's see how it opened and closed. So let's see that. It opened here, tested that, rejected it. This was a level. So I don't know where it is, so let's check it out. What price level is this? Roughly 2700. So let me just put it there, 2700, and see if there is something there going on 2700, which is right here. So I'll be marking there. Right? Now market opened at the green. As I told you, it will not stop at the green, but just we see green. This will be a stupid trading to do for 10 points. We're looking, this is designed for bigger, huge, bigger swings. Anyway, you came down, so now same thing you will do. This is what you see my marking. That's what I do all day long. If I'm ready to trade, and once I'm in, don't need to worry about it. Hold it for 3-4 days. I buy options only. That's all I do. So I don't have to worry about too much stop loss. So I know my accuracy is 8 wins and 2 losses. So it's part of my mental, structure. I said, okay, I'm willing to take losses. It doesn't bother me, 2 of them, but I'm gonna double my money on 8 of them. So there we go. So we had one structure. I don't want to draw this, but you can see here. This will be second structure. Let's just do it. So this market came down, it's going up, so I'll take the bottom. It could be this. This will be a big, huge trend line, which is not usable. Good trend line. Break and retested the backside. That's good trend line, but not for our levels. So, and how about this trend line? This is this point and this point. It's a 45-minute bars. So maybe we can use this trend line break and see where the structures come. So I put it here, the break and the top, and we got a box here. We draw the box. Okay. So we have C, bigger structures, and we have, this is what is driving the market on the right side. And I think I explained that in one of the videos 4 years back, but it's okay. I think it takes time, I guess. So, and there we go. This is the level, this is the level. And now I need to look at the oscillator. So market opened, market profile opened here. There's a huge gap. So I wanted to come close. It came close in these 2 boxes, as always, repeating over and over. Now I'm looking at the momentum. Is it going like this strong down, or is just waiting? It's like you can see it is fading, right? And then you can also look at this. Okay, since I'm holding for longer term, is basing because structures are completing. Now I need to do is buy long here. Can I do it here? It's far away. 40 points away. I don't want 40 points away loss. Let it come down. Next level is here and here, so I'll take this level. Then I'll wait for this guy to go down here or here. That's it. Or you can do trend line brain, whatever methodology you want to do. I'm giving you this simple structure methodology. Higher time frame levels, structure break on the current level, bigger swings, looking for swings and swings. You're not looking at this 10, 20 points. You're looking at, can I catch 100 points? 100 points, one contract is 5 grand. But you have to wait 2-3 days if you catch it properly. You will be scared. Oh, it might go down. It could go down. That's why you have stop loss here. Right, this is the loss you have to take and triple it here, 1, 2, and 3. So you should be, target should be at least here. And there we go. Right, if this is the stop loss area, then you should wait for 1, 2, and triple. Roughly somewhere here it came. You can take out. You will do the same thing. You will take this structure and see where this one ends. Right, these trend lines will continue to grow like this, and then this, and this, and we're measuring the structure, measure the structure. And here, where am I? Here am I at the green level, pink level. All right, thank you very much. So that's all I had to share, and congratulations to people who made the investment in their future. Videos are there, private coaching is there, and we can go through this whole 6 months. We'll let you drive it. If you want all the secrets, system is there. Let you drive it. Thank you.